morning and welcome. This is Business Morning. I'm Ladi Williams. Thank you for joining us.
And I'm Chimeze Obi Iwagu. Good morning and thank you for joining us. Well, latest figure from the National Bureau of Statistics show that a total of 392.77 billion naira was generated as company income tax in the first quarter of this year, up by 32.82% from the figure reported in the fourth quarter of last year. The data shows breweries, bottling and beverages industry raised the highest amount of CIT, which is 23.26 billion naira, while textile and garment generated 13.49 million naira. A total of 152.33 billion naira was generated as CIT locally. 184.59 billion naira was remitted as foreign CIT payment, while the balance of 55.85 billion naira was sourced from other payments out of the total amount generated in the first quarter.
Meanwhile, the latest migration and development brief from the World Bank shows the settlement inflows of Nigeria recorded a 28% loss in 2020. The report states that remittances to sub-Saharan Africa dipped by 12.5% to $42 billion last year, largely due to Nigeria's influence, which accounts for over 40% of the payment inflows to the region. However, settlements to low and middle countries reached $540 billion in 2020, a 1.6% decline from the figures reported in 2019.
And the African Development Bank says it will invest $3 billion over the next 10 years to build Africa's pharmaceutical industry. According to the AFDB president, Mr. Akinwumi Adesina, the bank will also support Africa's Centers for Disease Control and Prevention with $28 million to tackle the issue of vaccine supply. He adds that it is currently working with partners on how best to support the financing of manufacturing of vaccines on the continent. Mr. Adesina also projected a gradual recovery of African economies from the COVID-19 pandemic, with GDP growth at 3.4% for this year.
And now to the global oil market. Oil prices fell this morning, pulling back from an 8-week high as concerns about the coronavirus crisis in India, the world's third biggest importer of crude, tempered a rally driven by IEA and OPEC predictions that demand is coming back strong. Brent crude was down 32 cents at $69 a barrel after gaining more than 1% on Wednesday. West Texas Intermediate crude futures was down 31 cents to $65.77 a barrel, having risen 1.2% in the previous session. Oil demand is already outstripping supply, and the shortfall is expected to grow further even if Iran boosts exports, according to the International Energy Agency. A day earlier, the Organization of Petroleum Exporting Countries stuck to its forecast for a strong return of world oil demand in 2021, with growth in China and the United States canceling out the impact of coronavirus crisis in India. But global concern is rising over the situation in India, the world's second most populous country, where a variant of the coronavirus is rampaging through the countryside in the deadliest 24 hours since the pandemic began.
All right, we will discuss the burning economic issues as they impact the commodities market space with one of the research analysts with financial derivatives company, Dumebi Iyeke, in a moment. This is Business. All right, let's talk commodities now with Dumebi Iyeke, one of the research analysts with financial derivatives company. Hello, Dumebi. Happy holiday.
Happy
Good
holiday.
to have you this holiday.
Good morning. Happy
Welcome
holidays
back.
to
Good morning.
you too. Thank you.
Well, while we are on holiday here, of course, the oil market is still trading. And today, this morning, we saw prices go down despite the optimism in the global demand as announced by OPEC and the IEA. And then we've seen the rise in COVID cases in India. Of course, that is what pushed prices down. So is this a case for worry, particularly for Nigeria?
Looking at the situation in India, if we're looking at Nigeria in correlation with India, there are two major similarities between both countries. We're both emerging markets with huge populations, and we're both colonized by the British. So, but if we look at the similarities between both countries, India, in its sense or in its right, has been able to maintain its economic structure in such a way that it has a lot of economic, it's been able to absorb a lot of shocks that have hit it so many times, apart from right now, the COVID pandemic that's really struggling with. So looking at the similarities between India and Nigeria, there is that concern that what's happening in India could actually happen in Nigeria. I mean, Bloomberg released a report yesterday saying that 44 countries already have this strain that India is talking about. So we know what happened with the index case of Nigeria. The fear is that could this repeat itself with this new variant that's in India, and do we have what it takes to actually contain this variant? Do we have what it takes to make sure it doesn't spread as much? Do we have the macroeconomic capacity to deal with this? And the truth of the matter is that Nigeria cannot afford a third wave. We can't even afford another lockdown. Why? Macroeconomic fundamentals are not in our favor, and we cannot just, we can't be lax with this, because the variant is, it has proved itself in India to be something that is very, very, very tough and difficult for the Indian economy to handle. How much more us?
Nigerian. Well, next meeting for OPEC is June 1st.
Yes.
Any thoughts on what the possible outcome would be?
I mean, it's still too early to say what the cartel and its allies would do and what direction they will go. But we're having hints from their position right now, and this is because they've come out to say they're sticking with their demand forecast. They're being optimistic, and a major reason why they're saying this is because we're seeing a rebound in economic activities in the Eurozone. We're seeing a rebound in the Chinese economy, and we're also seeing good things happen in the UK and the US. So there is some hope of recovery for oil demand, and if this happens, OPEC, could either leave its current ease in output cuts, which is beneficial to Nigeria, which is, as Nigeria is more sensitive to an increase in oil production, than prices. And if they decide to do that, I mean, it's good news to the markets, good news to Nigeria.
What's the worst case scenario?
The worst case scenario is because of the Indian strain, if that spreads across so many other countries.
That's a major concern
That's a huge concern, and we see renewed lockdowns, especially from Nigeria's major trading partners, which are in the Eurozone. If we see the US, decide to contain as well, the UK decide to contain as well, that's really bad news for the oil market. We could see a repeat of what happened in Q2 when the pandemic was at its peak, and that's just really bad news for Nigeria.
Now, talking about the development in the U.S., looking at some kind of concerning outcome there. Yesterday, the U.S. came up with its inflation data, and that sent markets roiling because the inflation has gone higher than, expected. And that is likely to kind of push interest rates.
So the thing is this. The U.S. is a dominant economy, a dominant global economy. Whatever happens in the U.S. could affect a lot, it will affect a lot of economies, especially emerging markets, of which Nigeria is one of. So the U.S. inflation rising, there has been so much debate as to the U.S. inflation climbing, and this is because of the stimulus packages, the infrastructure plan, and all of this pushing inflation beyond the U.S. Fed's target of 2%. The original forecast of 3.6, and the inflation peaked higher than all of this. So there are increased fears of global interest rates rising, because why? If U.S. inflation increases, the U.S. Fed is under pressure to increase interest rates.
Well, the Fed has continued to play down
exactly,
on the risk.
But at this time, when they made that statement, U.S. inflation numbers were not out, and they were confident that inflation would not go overboard. We can still contain inflation. They've left interest rates at near zero, about 0 to 0.25%. But with inflation at 4.2, it simply means that there is negative real rate of return on investment. Investors are weary. The markets are weary. The U.S. Fed will be under pressure. They could decide to increase interest rates. And if the U.S. Fed decides to increase interest rates, other CBN, other global central banks could follow suit. And if this happens, we see an increase in global interest rates. And if this happens,
and do you see that also Nigeria?
Yes. Before we even get to that, what we'll likely see is investors pulling out funds from emerging markets like Nigeria into these global economies. And also, that's really bad, because there'll be an increase in capital outflows, of which emerging markets need this capital inflows for infrastructure development to be able to shield against the impact of the COVID-19. And then, and another major impact is this. If global interest rates rise, all the economies, especially the emerging markets and countries in Africa that have incurred huge debts, would be facing an increase in debt service costs.
Now, so do you see this as a determinant factor for the MPC? Of course, their meeting is coming up later in the day. This might just be one of the considerations in coming out with their decisions.
I mean, we've seen the MPC play on domestic data rather than happenings all over, apart from you know, the COVID-19 lockdowns, renewed lockdowns globally, and all of that. But the major considerations that we're seeing that the MPC would likely focus on are the data that are going to be released before then, and that is number one, the GDP numbers that were released May 24, and the April inflation numbers to be released May 17. So their decision on whether to either hike interest rates or maintain status quo again will be dependent on these two factors primarily, and all the other packages and incentives that they have, you know, pushed into the economy, and the impact of all of this, you know, in the economy. So I'm not so sure. We can't categorically say that if the U.S. Fed increased interest and we see global interest rates rise, the CBN, or rather the MPC, will be forced to increase interest rates. I mean, we've seen...
But we've seen our inflation numbers skyrocketing.
Exactly. So definitely there is some pressure to do that. There is heightened pressure to increase interest rates because we need to bridge that gap. But we cannot overrule the fact that the CBN has been using orthodox monetary policy tools to actually increase interest rates. 91-day TBO rates have remained around 2%, 180 days 2%, but we have been seeing the 364-day TBO rates increase. It's almost 10%.
For how long will that continue?
How long, yeah.
I mean, it's not a win-win situation, but we can say that something is happening. Something is happening in the interest rate environment. Short-term interbank interest rates are also increasing. You know, so we can say that something is happening in the interest rate environment. We need the anchor rate to move, but we don't know if that's going to happen immediately. Well, we can definitely say that there is pressure to do that. And one significant thing that happened at the last MPC meeting was that of all the voting members, we saw that there was an increase in the number of members that agreed for a rate hike. So if the MPC decides to, you know, either maintain status quo or increase interest rate, whatever decision they decide to make, what we're going to see is that more members would definitely vote for a rate hike. That's a definite factor that we would likely see this MPC.
We'll definitely watch out and see
just keep our fingers crossed.
Fingers crossed there. So let's look at the FX market now. Naira remained flat at 485 at the parallel market. What is your outlook on the Forex market, especially with external reserves still declining at this point?
Two reasons why we are saying we're seeing the external reserves decline. Two reasons that we can, you know, lay our fingers on is that number one, the CBN is clearing its forex demand backlog to the foreign portfolio investors. The backlog is about $2 billion. So we're seeing the fact that CBN has resumed, you know, it's clearing of that particular backlog. So that's, you know, affecting the external reserves. And also we're seeing that the CBN is trying to, you know, keep the Naira stable, at least to a certain extent. So we're seeing all of that happen. And the truth of the matter is that Forex volatility is likely to continue. And this is because the economy is rebounding. You know, manufacturers are, you know, their activities are increasing. Students are resuming back to school. There's so many things that are happening in the economy, and there is heightened demand for Forex. So not until there is ample supply of Forex, we will continue to see the currency, you know, we'll continue to see heightened Forex pressures in the market.
All right, the Ramadan fast, I guess, has come to an end, and then, of course, our Muslim friends are celebrating today. So how do you think the domestic commodities market prices is going to move going forward?
Like we saw when the fasting started, there was a significant increase in commodity prices. Even though the fasting was not the main reason why prices were increasing, but we saw its impact on commodity prices. So as the fast is coming to an end, we're expecting that prices could ease, you know, temporarily. And that's because we can't overrule the effect of insecurity on food production. and food supply across the country. We can't overrule supply chain disruptions. We can't overrule the exchange rate pass-through effect to commodity prices. We can't overrule Forex restrictions on imported commodities, all of this having their impact on domestic commodity prices. But we're expecting that as the fasting, has come to an end, commodity prices could ease, temporarily.
All right, what's your outlook for Nigeria's inflation levels in the near term?
In the near term. We're looking at the April inflation numbers to be released April 17. We're forecasting a further spike in inflation numbers to 18.77%. That's for headline inflation. For food inflation, we're looking at 24%. And that's just more bad news to the Nigerian consumer. Consumer disposable income is going to significantly decline, and this is because our income is not increasing. So, people are going to be under pressure. Consumers would likely focus more of their spending on staples and just their, rather stay away from luxury spending and just focus on, on the immediate needs, necessities. With the increase, with the Forex pressures, and we could see manufacturers also, move their, pass the burden of all of this to the consumer. So definitely the Nigerian consumer is not exactly going to find this funny
right
in the near term, yeah.
Okay, we'll keep our fingers crossed, and we'll look forward to those numbers.
Yes.
That's next week?
Yes.
Monday, 17th?
Yes.
For the inflation numbers, and of
Yes.
course the upper Monday, 24th,
GDP numbers,
for the
yes.
GDP numbers.
Hope for a miracle.
Thank you very much, Dumebi. We do
Thank you so
appreciate
much.
your time.
Thank you.
Enjoy the rest of the holiday. I'm
Thank
sure
you.
you're back
You
to
too.
work tomorrow.
Thank you.
Okay, we'll take a break, and when we come back, we look at the growth in the mutual fund industry. Just stay with us.
Welcome back. You're still watching Business Morning. Mutual funds have been considered as a good alternative investment opportunity, particularly for retail investors, because it gives them access to diversified and professionally managed portfolios at a low price. However, mutual funds in Nigeria recorded a bearish performance in the first quarter of 2021, as only 25 funds posted positive growth against 59 declines, while 34 funds remained flat. Let's talk more about this now to Managing Director, Codrus Assets Management, Gbolahan Aino. Mr. Aino, thank you for joining us. Great to have you.
Good morning.
Good morning.
Happy holidays.
Happy holidays. Well, investors' participation in mutual funds has been on the rise, with net asset value growing by about 50% to 1.6 trillion naira last year. What is driving this growth?
Thank you for that question. Interestingly, if we backtrack, the mutual fund industry as of 2002 was just about 40 billion in terms of NAV. There were just about 12 funds. But fast forward, we've seen the growth in the industry, and it's been a confluence of factors. One, the regulators have contributed to the growth, and also the operators as well. In recent times, there was a period where we had high yielding environment in Nigeria, so we saw a lot of money market mutual fund coming out. So investors were really aggressive in terms of money market mutual fund. But last year, the mutual fund industry grew by 50%, gained about 500 billion in terms of NAV. What fueled it, despite the pandemic, we saw a lot of shift to safety. So there was a lot of investors that took interest in fixed income fund and dollar funds as well. Last year was a period of low interest rate environment. Yields were almost in the negative territory. So some investors shift their preference from money market instruments to fixed income instruments and bond and dollar instruments. At the moment, the dollar mutual fund is about 200 billion in terms of NAV. But in terms of what has really fueled it, so if you backtrack, before, the industry had a lot of infractions. So regulators tried to sanitize the industry. One, they stopped giving out licenses. But after that, they started to give out licenses. What they did as well was that they made it quite easy to launch a mutual fund. In the past, to launch a mutual fund, you have to have 10% of the value you're trying to launch. That value was reduced to 5%. Also, in terms of the IPO, now there's no IPO if you want to launch a mutual fund. That's initial public offer. Once the document has been approved by the SEC, you can start your mutual fund from day one. So in terms of the regulatory environment, this has been more favorable. And also, we are now seeing a lot of products. In the past, we were just equity mutual funds that we had. Now we have a diversity of mutual funds. We have Islamic-based mutual funds. We have ethical mutual funds. We have infrastructure funds. We have real estate mutual funds. We have fixed income mutual funds. We have dollar-based mutual fund. And like you rightly said, mutual fund is just a vehicle. It gives investors access to various sort of investments. Ordinarily, it's quite expensive to do some investment. If you're going to buy one, for instance, at the private market, you need 50 million. Not everybody can afford 50 million, but mutual fund makes it very easy for you. With as little as 5,000, you can access a lot of the mutual fund. I usually call mutual fund democracy of investment of the people, by the people, and for the people, because it's affordable, it is transparent, and it's easy to access. So what has driven the growth is being regulatory, and it's also been a lot of the operator, and a lot of also products as well. We've had various products now in the mutual fund space. At the moment, we have over 115 type of mutual fund at the moment. Like I said, 2002, we just had 12 mutual funds. Now we have 115. And the NAV, like you already said, moved to 1.6 trillion. Although there's been a bit of decline this year, as investors are also trying to invest directly in the fixed income markets. This year has been a year of rising yield environments. So we've seen some people to their mutual fund and also investing directly. But there's a lot of growth potential, like I would say. In other clients, mutual fund industry is massive. It's about 100% in terms of penetration. When Nigeria, mutual fund as percent of GDP is just about 1%. So there's still a long way to go. But in terms of where we are coming from, we've gone a long way. In terms of compound annual growth rate, we've done about 37% in about 9 years. And I think I think I just go forward from where we are at the moment.
Yeah, talking about the potentials for growth, yeah, in comparison to the pension industry, mutual fund is just about 14% of the pension size. From a regulator and policy point of view, what do you think can be done to engender growth?
Thank you. Yeah, you're right about that. So the pension industry is over 10 trillion. For the mutual fund, we're just about 1.5 trillion at the moment. So just about 14% in terms of size. Like I said, the growth we've seen now is both regulatory and operation driven. I think the regulators can also do more. So in terms of fee structure, lower the fee also means that the return to investors will also be higher as well. So I did mention that they reduced the proprietary investment from 10% to 5%, which is good. I'm looking for a period when that will be totally eroded. So you don't need to put the amount of money you want to launch a fund. Just imagine if you need to launch a fund of maybe 10 billion, that means you have to put down about 500 million, which is expensive. So that can stifle growth. So I'm looking for a period where maybe there won't be any proprietary allocation that needs to be put down. Also in terms of awareness, they've done a lot, and FMAN has done a lot as well. FMAN is the Fund Manager Association of Nigeria. They've been doing a lot in terms of awareness, in terms of financial literacy, and they've also done a lot of collaboration with the regulator. So I think there can be more awareness. I think until we get to a point where everybody on the street knows what mutual fund is, every student, every worker knows what mutual fund is. Abroad, a lot of people invest through mutual fund. The mutual fund size is almost as big as even the stock market size. The biggest mutual fund player in the world is BlackRock. In terms of NAV size, is 9 trillion US dollars, followed by Vanguard. Of course, in Nigeria, we are moving forward. So I think when the environment becomes a lot easier, we'll see more participation. I think from the operator perspective as well, there's a lot that can be done. And I think in terms of reporting, there can be more standardization in terms of reporting as well. That makes it easier for investors to be able to compare likes with like and be able to choose which mutual fund they want to go with. Also, we've seen a lot of professional fund managers coming to the space as well. I think that is good. And I think more of that as well can also bring a lot of confidence into the industry as well. I think from a regulatory perspective as well, maybe workshop from time to time from the operators and regulators as well can also maybe want to engender growth in the mutual fund space.
All right, are mutual funds ideal for every investor class, or is it better just for retail investors only?
So it's ideal for everybody, both retail, both HNIs, both institutions. In the Pension Act, there's an allocation for mutual fund. Pension companies can invest in mutual fund, although there are requirements or categories for to invest in mutual fund. So anyone can invest in mutual fund. One is to see that mutual fund is a vehicle that allows you to achieve your objective. And that's a mistake a lot of people have made in the past. They think that mutual fund just speaks to fixed deposits or mutual fund just speaks to equities. Abroad, we have commodity-based mutual funds. We have ETFs. Although we have ETFs in Nigeria, so we have different kind of mutual fund, real estate. We have mutual fund that focus on oil and gas. And so we have mutual funds that focus on retirement. So it's a vehicle that just helps you to achieve your objective. And two words in mutual fund. So mutual fund, mutual then fund. Mutual means that it's a collective objective, people with the same objective, either long term or low risk or high risk, and the fund is being pulled together. And so for every time you invest in mutual fund, you need to understand the objective of the mutual fund you invest in. Not all mutual funds are the same. Some are equity based, some are fixed income based, some are money market based. We need to understand the objective. Am I investing for the long term? Am I investing for the short term? When answering your question, yes, anyone can invest in mutual fund, both retail, both HNIs, and both institutions.
Now, according to the latest inflation data released by the NBS, Nigeria's inflation number, of course, sustained upward trajectory in March, increasing to about 18.17% relative to 17.33% in February. The next inflation data, of course, for April will be released on Monday. Despite the uptick, the general expectation is that the direction of inflation remains upwards. In your opinion, how do you think the rise in inflation affects mutual funds investment?
Okay, I think that's a very good question. And so last year we had low yield environment, and so a lot of investors shift their preference from money market mutual funds to fixed income mutual fund. Now at the moment, inflation is rising, and for a lot of investors, they have negative return on their investment because inflation rate is higher than the return they're getting on their investment. But what we've seen in recent times is that there's been a diversification in terms of currency. So a lot of investors are shifting their mutual fund from local mutual funds to foreign base. Also, some investors are also taking advantage of the high interest rate environment and investing in fixed income mutual funds. We also see some investors as well that they don't mind waiting the long haul. They're investing in equity mutual fund or balanced mutual fund. What equity does for you is that over a long period of time, like 3 years, it always outperforms all other asset classes. For instance, a lot of equity mutual fund last year did over 50% in terms of return. And last year, we saw a lot of money market mutual fund doing just about 5%, fixed income mutual fund doing sub 10%. Equity did about 50% for a lot of mutual fund. So put that long-term objective, you can begin to invest in equity mutual fund. If your investment is short-term, you can still take advantage of money market interest rates or money market mutual fund. The idea is that when you expect yields to go up, you try to maintain a short duration and take advantage of yields when yields get higher. So in trying to hedge against inflation, what I advocate is try to diversify in terms of currency, have some mutual funds in dollar mutual funds, and also have some equity mutual funds if you're able to take 2 or 3 year horizon. And if just your horizon is just about 5 years, also take some fixed income mutual fund. But it's very possible for you to hedge against inflation rates in this current climate that we are in.
All right. Data from the Security and Exchange Commission revealed that, on average, the 118 listed funds as of 31st of March 2021 dipped by about 1.91%. You know, having recorded a similar decline in the month of February, what would you say contributed to that?
So, good question. So one is the rising yield environment. When we saw low yield environment last year, we saw a lot of investors move their preference from money market mutual funds to fixed income mutual fund. Now that yields are rising, we are seeing investors take their funds from mutual funds and investing directly in T-bills. 1 year treasury bill is currently at 10%, although the 90-day treasury bill is at 2%, 180 days at 3%. We are seeing direct investment in some of these instruments. Also, we saw some institutional funds as well invest in mutual fund last year. So for some of them, they're investing directly. Last year, for a lot of the banks, they were giving rates as low as 1% and sub 1%. Since the beginning of this year, we've seen a repricing for a lot of the banks. A lot of them are giving higher rates. So we are seeing funds leave from the mutual funds and into direct fixed deposit investments and some direct Eurobond investments at the moment. So we are seeing direct investments. And last year, for instance, yields were low. What we're seeing as well is that some people are taking funds and also doing some real estate investments. Some people took advantage of low yield environment to develop their properties in real estate. So I just seen one asset reallocation, and that's what's causing the dip in mutual funds at the moment.
All right, thank you very much for educating us on that, Bolaho. We do appreciate your time and enjoy the rest of the holiday.
Thank you, and enjoy your holiday as well.
I'm not on holiday, incidentally. Anyway, Bolaho Aido is the Managing Director, Cadros Asset Management. All right, let's look at the market. Now, of course, it's a holiday here and the markets are closed, but let's look at some of the recent corporate releases in the market. Anete, what's cooking?
Good morning, Jimmy. Yes, like you rightly said, the markets are still on holiday, a second day in the week. But I think it's good for us to do justice to the recent results released by two market heavyweights. That's talking about one from the industrial goods counter and the second from the telecoms sector. So first, we'll be taking a look at the results from Dangote Cement. It was, call it a strong growth or call it a blowout result, but you will not be wrong to make that attribute. It recorded about 33.50% increase in its revenue for the first quarter of this year. And that's despite of some challenges that were recorded in the first quarter. And then, of course, its revenue from Nigeria was up by 33.65% year on year, while other African revenues was up by 33.10%. So we can see those two numbers contributed largely to what we see here in terms of revenue. Now, for the pre-tax profit, it was up by 47.75%. Gross profit also up by 41.28%. And as well as the sales volume. Sales volume Nigerian and Pan-African volume was up by 21.15% year on year. That's for the Nigerian business, while the Pan-African sales grew by 12.82%. So you can see it was a very blowout earnings result for the company. And of course, it's no surprise that when the company recorded some downturn on Monday, it rebounded its share price. It closed that day by up by 215 naira per share. So that means that when the market resumes on tomorrow, Friday, we're expecting to see more interest and more investor activity on that on that stock. So we move over to to Airtel Africa. It released its full year earnings results late on Wednesday. So we can see it's also blowout earnings, except for the earnings per share, which fell by 12.6%, and that's attributed to a lower number of average shares within the previous year. So now, Airtel Africa, it's a kind of share that it hardly moves on the market. So we're expecting investors to take a cue from what the result posted on Wednesday will turn out in Friday's trading session. But meanwhile, it's quite an interesting figure here, all positives besides the what with the 12.6% drop that we saw in its earnings per share. Well, meanwhile, the company is proposing a 2.5 cents as final dividend for the full year results. Of course, it also witnessed a slowdown in its customer base in the country. The customer growth was down, and that's due to the new SIM card regulations requirement by the NCC. So, of course, we see that the company, in spite some challenges within 2020, it still posted strong earnings results, as you can see on the board there. So, for now, the market, it's still quiet on the street there, but we're waiting to see how the share price will react in Friday's session. Its share price has been stagnant at 930. It was at 1,000 naira. It has fallen below the 1,000 threshold, but this pricing is in dollar terms. So we're waiting to see what the outcome will be on Friday. And of course, I'm sure that traders will also be eyeing this latest result released to the markets.
Well, this week has been, of course, it's a short trading week, and we've seen some positive trend in the market this week. So as the market resumes tomorrow, are we likely to see that positive trend we saw at the beginning of the week, perhaps ending the week as well?
Yes, Jimmy. You know, we started the second week of May with a rebound, which started on Friday. We've been saying that within the course of the week. Also on Tuesday. So several traders I spoke with before they went on holiday say they expect that the market is going to sustain that uptrend because of some investors will be locking in on some of the losses that was recorded in the previous sessions last week. We had about three downturns last week. So we're also expected to see about 3 upturns in this week. So let's just keep our eyes and our fingers crossed for Friday's trading session.
Yeah, well, we'll continue to keep our fingers crossed. Don't forget, Monday, I'm sure the market will be looking forward to the inflation data. We've seen how inflation has been rising. That, again, would probably play out in the market tomorrow. Don't you think so?
Yes, I share that optimism with you, but, you know, you never can tell. It's a very dynamic market. It could decide to take the sides of the bears. It could decide to maintain the sides of the territory of the bulls. So it's just a wait-and-see game. But don't forget, keep the optimism alive.
Absolutely. We'll continue to be optimistic as long as there is life. Thank you very much, Anete. All right, we do another short break, and when we come back, we do an opening call to London. Inflation worries continue to grip the markets today after U.S. consumer prices jumped much more sharply than expected in April. Let's see how the markets in London are opening up today. Good morning, Juliana. The news that the consumer price index has climbed 4.2% during the month from a year earlier fueled fears that the U.S. economy could be running too hot. What is it like with the market numbers this morning?
Well, good morning, Chimeze. Pretty bruising start to the FTSE 100, suffering from triple-digit losses. We had this, didn't we, after we had the signal from China that inflation fears were anything but anxiety, but a reality. And then it recovered yesterday, but we're back to square one today. And I think what we're seeing on the FTSE is what we're seeing across Europe, sharply in the red today, taking its cue from the Nasdaq, which is a pretty tech-heavy stock index. On the Wall Street, they were down about 2.4%, and then we're seeing at the moment, I believe the FTSE is down about 2.2%. As you said, it's inflation that's concerning investors. They are very, very concerned that the US Federal Reserve may tighten its pretty loose monetary policy that has significantly benefited the tech industry during the pandemic.
And former UK Prime Minister David Cameron will today face questioning over his text message lobbying of ministers on behalf of Green Seal Capital. How do you think this will play out?
Well, it's going to be interesting. I think the entire British media plus the House of Commons ministers will have their popcorn ready. This is going to be the first time that we've heard from the former Prime Minister David Cameron officially since he got caught up in this Green Seal scandal that has dogged Boris Johnson's government with being sleazy, a term that's pretty synonymous with a Tory government and the British media. He'll be speaking about 2:30 p.m. local time, same West African time. Talking about some of this lobbying scandal. Over the past couple of days, Treasury ministers from cross-party MPs have released what I would consider pretty shameful and embarrassing text messages and WhatsApps and emails from David Cameron, showing that when the country was in the height of the pandemic, the day after Boris Johnson was admitted into hospital, he seemed to be putting that aside and was desperately seeking attention with regards to getting access to government funds for Green Seal. So that's obviously going to all come out in the wash today. There are also going to be questions that go back to 2012 when he was leader of the Conservative Party, because Lex Greensill, the founder of Green Seal Capital, was actually working within government during that time. Now, this is some old dirt that's been dug up, and they're going to want to know who he was responsible to, what capacity he was working in. So yes, a lot of people got their knives out for the former Prime Minister. It's going to be probably live on British TV, and like I said, it's going to be a pretty shameful day for the former Tory leader.
And hopefully you'll update us on that later in the day. All right, let's look at the crypto market. Ladi, as much as $365 billion wiped off crypto market after Tesla stops car purchases with Bitcoin. Elon Musk raised some environmental concerns over rapidly increasing use of fossil fuels for Bitcoin mining. But one would ask, what about the production of the fiat money?
Exactly. So apparently, Elon Musk strikes again. This time, last time he called Dogecoin a hustle. And now, raising
A
concerns
great
about
influencer.
mining Bitcoin. Well, we don't know where Elon stands now because traders
After
are not
putting
finding
in
it funny.
$1.5 billion
$1 billion.
and perhaps taking profit.
Well, he said he didn't take profit, but who knows?
Ah.
Let's look at market cap, $2.31 trillion, down about 9.10%. 24-hour volume, $307.11 billion traded, up about 31%. Bitcoin dominance plummeting there, 41.27%. Let's see what look at the Elon Musk effect there, right there on FTX exchange. You see from $58,000 went all the way down to about 46,000 overnight, but had a little bounce back there, and now it's trading around 49,000. Let's talk to Tosi Olugbenga now, a blockchain expert. Hello, Tosi.
Hi, good morning.
Good morning, Tosi. I know you know a lot about Bitcoin mining. Is Elon Musk right about these concerns?
Well, the concern is actually not legitimate because, as you know, the cost of mining gold, the cost of mining paper currency, the cost of government use of energy is far, far higher than that of Bitcoin mining. So it is absolutely not a case of an environmental case. It's a case of market manipulation. So now this is what is going to happen. That tweet will help institutional buyers who think the price of Bitcoin has gone a bit above them in the 50,000s to bring it down to 40-something thousand to shake off weak hands and enter into the market at a very cheaper price than before you now experience a new rally. So it's simply market manipulation.
Okay. So for you, it's market manipulation. But I remember the last bull market, we had McAfee. That time, when McAfee sneezes, the market actually reacts. And now McAfee is no more. And now we have Elon Musk. Where do you see Elon Musk's influence going next?
Yeah, its influence will always be there. Okay, so at the time he was influencing Dogecoin. Of course, he has not said anything wrong about Bitcoin. He said that they would look at alternative cryptocurrency that Tesla will be using. So if tomorrow he wakes up to tweet that Tesla will now be accepting this particular coin, for instance, then he's now trying to shift attention from maybe for the BTC or the Dogecoin to the new coin he wants to talk about. You understand? So it's all left for traders to be very careful about how they manage their expectations within such a very volatile market that is subjective to predictions, assumptions, and most especially manipulations.
All right, Tosi, thank you so much for your time. We'll keep tracking whatever Elon Musk says next. So, Chimmy, we don't know what the next coin is going to be, but the market will react.
Maybe it's going to be ZRX.
Who knows? Who knows?
The volatility in this market is unbeatable. And that's why it's important to, of course, educate our viewers.
Exactly.
Or potential investors who probably will want to play in this market to just be very cautious and ensure that you do your research, you ask questions,
your own research, yes.
You talk to professionals before you invest. Of course, just as your guest said, Elon Musk didn't really say anything bad about the crypto market. He's still there playing fully in the crypto market, but then you have to look before you act.
And he won't accept Bitcoin as payment for now.
But he doesn't have to come out and announce that. All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwaku.
And I'm Ladi Williams. Thank you for watching.